Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust or potentially an opportunity zone, is the best way for you to defer highly appreciated asset capital gains tax when you sell cryptocurrency, businesses, real estate. Save a failed 1031 exchange so you can create and preserve more wealth, or help your clients and partners and friends do the same. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's a repeat guest. He's a good friend of mine. I see him about 2 or 3 times a week at the Lifetime Gym in Roseville, if you're familiar with that. We used to play basketball a lot, but now we're kind of not finding gyms anymore. So we're working on getting that going. He's been featured on the Wall Street Journal, Forbes, Bigger Pockets, BuzzFeed, Entrepreneur, the Huffington Post. He has all things like wealth, real estate, leadership, all wrapped into one. Please welcome to the show with me, Matt Aitchison. Matt, how you doing?
I'm great, brother. How you doing?
Hey, better than I deserve. Excited to have you back on the show. For our listeners who are getting to know you for the first time, in just a second, you're going to tell them a little bit about your story. But just so everyone knows, we're talking all things Texas Hotel Opportunity Zone investing. And so take it away, Matt. Tell us a little bit about your story and your focus.
Yeah, I mean, like everyone, you start from the bottom, right? I have been on this, real estate investment journey for the last 12 years now. I graduated with an expensive piece of paper and had no idea what I wanted to do with it. And as I was interviewing with a bunch of different, jobs and positions to make 30, 40 grand a year, I was like, this is just not going to get me where I want to go, the lifestyle that I envisioned for myself. And so kind of a crazy story. I ended up finding one of those Craigslist ads, real estate investor seeks mentee. This was back in 2010. And that first year, basically, I ended up working for a guy for free for a year, flipped over 100 houses with him. Then I realized, hey, I know how to do this for myself, but I was still broke, living at home, didn't have any money, and really just not a ton of confidence in how I was going to go about doing this. But long story short, I ended up finding my first flip back in 2010. I netted over $100,000 on it. And I was like, okay, I think I can figure this out. And, that led to flipping, excuse me, a couple hundred houses over the last, decade. But I realized that, my vertical income wasn't going to unlock the freedom and the time that I was, looking for in my lifestyle. And so I started buying real estate and holding single families, and then moving up to quadplexes, then starting to buy commercial strip centers. And then a couple years back, I got a little bit more into the private equity, family office, fund space. And that was something that really kind of opened up a lot of different doors for me, where my skill set still translated. It was just kind of playing a different board game in terms of the single family investment world that I'd been in for a significant portion of my career, and going, okay, once I passed go a couple times, I was like, I can learn this strategy. I can figure out how to apply my skill set in this arena, in these areas. And so I started doing syndications and started, working and consulting with different private equity funds and placing capital for them and family offices, recapping deals, development opportunities. And that led me into hospitality. And so now I own 3 hotels myself. We're building a 4th, which I'm sure we're going to be talking about here today on the show. That's an opportunity zone on the Riverwalk in downtown San Antonio. And so hospitality kind of is where I've planted my flag now, but still doing, some syndications, placing equity in different deals, and just having fun, man, understanding that there's so many different in the forest of real estate, there's so many different tree trunks that you can go and chop at, right? And so many different branches off of those tree trunks that are opportunistic for investors, whether you're an LP or a GP. And so just a really fun, world to get to call a career in terms of the real estate space.
Phenomenal, Matt. I always love seeing you, spending time with you, playing basketball with you, and seeing the deals, right? This podcast, YouTube world we're kind of in, not a lot of people are local, right? We're all kind of all over the world. Yep. And so to have someone local like yourself is really a treat. So I appreciate that. And by the way, you can learn more about Matt by going to his website. That's Matt. And Matt, I want to make sure I pronounce your last name, because I feel like it's just kind of a tongue twister. Matt, pronounce the last name.
MattAitchison.com. You guys can check out more stuff there, or MillionaireMindcast.com on my podcast. But yeah, both of them kind of feed into the same spot.
Awesome. So now let's dive right into the topic at hand, which is Texas Hotel Opportunity Zone investing. This deal in San Antonio, I've been watching it for a while now. I've been sending you some referrals for some folks who perhaps wasn't the best fit for the Deferred Sales Trust, but are looking at Opportunity Zone investing as a way to defer capital gains tax. So Matt, let's talk about just for folks who are learning about the Opportunity Zone, quickly, like what are the advantages, and then B, let's dive right into the deal and the specs of the deal. Okay.
Yeah, I mean, the Opportunity Zone is kind of a sister to the 1031 exchange, and honestly, the Deferred Sales Trust in, just a little bit different of a capacity where it's a tax deferral vehicle, right? Where you can put in gains and not just, in 1031. Obviously, it's real estate gains, right, that we're deferring. But the beauty of an Opportunity Zone, when they created this back in 2010, was to ultimately provide anybody with gains to invest into what they believed were, at the time when they did the census and kind of labeled all the opportunity zones around the country, as underdeveloped or underserved areas or communities. And mind you, we got pretty lucky with this one. For example, East Austin, parts of East Austin, Texas, which is one of the hottest development and areas in the entire country, is an opportunity zone. Same thing with this particular area in downtown San Antonio on the Riverwalk. And there's a couple others, maybe 10 to 15% of the opportunity zones, in my opinion, have just turned into insane hot spots that if you were able to buy dirt or opportunity in those areas in an opportunity zone, not only did you get the upside of what's now happening in those areas, but the fact that opportunity zone in this vehicle, this tax deferral vehicle, that it allows you to put gains in and defer those taxes, and in unison with that, get the upside and the growth of it tax-free as well. Very cool. So whether it's, crypto gains, with stock gains, selling a business, obviously real estate, and you couldn't find maybe a 1031 exchange to go into, opportunity zones are a great vehicle to explore for investment opportunities.
Yeah, and Texas is, maybe now the new business capital of the world. At least seems like all the businesses flocking there, right? Tesla,
Yep.
Oracle, one other one, all flocked to Austin, and I think San Antonio. I was looking at the deal, underwriting the hotel deal. It's like one of the most visited places in all of America for tourism, right? It's really, really surprising. So touch bases on just the tourist attraction for San Antonio, and which is why hotels are perfect for tourists, right? And then dive into the specs of the deal and what it's looking like.
Yeah, I mean, we to be honest, everybody says that. And I was even shocked in the beginning as well. My business partner is very well integrated into the, San Antonio community. But when he was enlightening me on these market demographics, when we were doing a lot of the studies a few years back, to see how many people frequent San Antonio, one, it having a very Hispanic cultural influence, kind of being one of the gateways to Mexico, and a lot of Mexican influence within this city. The amount of tourism that happens every year, not just with Hispanic influence, but from travelers all around the country to come and see the Riverwalk and enjoy some of the things in San Antonio with the Alamo and other great things. And then obviously there being a lot of business travelers. It's one of the top frequented tourist destinations in the entire country, which is absolutely insane to think about. Also, it's kind of the last frontier in Texas of a large, let's just say a large, city that really has not been overinflated or overdeveloped yet. You got Houston, Dallas, Austin, and some other areas around Texas that, have just been frothy for a really long time. And so now we're starting to see a lot of those individuals, those companies, those funds, those groups that are going, okay, maybe we should start looking at another market and diversifying out of some of these markets. San Antonio is really that last market. So we're really excited to see what infrastructure, what plans, and what companies are moving a lot of capital into this area. So from that perspective, very excited. And in particular, we're a boutique model. So we're a luxury boutique model that is not your traditional flagged hotel. And the amount of keys in the San Antonio market for boutique is very underserved. And at the same time, we also believe that the market trends and data and kind of studies in terms of tourism and travel and where people are saying they want to stay at are not at kind of your sterile beiges and browns and whites, in the Hilton or the Hyatt anymore. They want to get something that immerses them into the community and the place that they're traveling to and the food that's, customary in those areas instead of kind of your cookie cutter type stuff. So that's one of the things that we're really playing to. And then our operating group, for this particular hotel, which is Accor. They acquired SBE. They're one of the largest hotel operators, behind, let's say, Hyatt and Hilton in the world. Very big footprint in Europe and other countries around the world. And they've got a good footprint over the last couple years in the United States, particularly in the luxury market, San Francisco, New York, Atlanta, Chicago, and we're going to be their first luxury boutique hotel in Texas. So we're really excited about that. We know what we're great at. We're good developers. But when it comes to, making sure that we're over delivering and under promising for our LPs and our investors that are coming into our world, we really wanted to make sure that we had assembled the best world-class all-star team who is great at what they do. We know what we're good at. We know what we're not good at. So getting the right people in the right seats on this development team was something that we were very particular on when it came to the contractor, the interior design team, all the architects, all engine, and you name it. We really took our time on this one. And COVID actually, being what felt like a catastrophic blow to this deal, was actually a major blessing. One being that we own the dirt. We were able to fully entitle it and kind of take some time to court the right people to really kind of select what we, would consider our starting five, right, to go out there and win the championship. So in terms of the deal, I'm sure we'll dig into that in a little bit, but we're just really excited about the market and the team and where we think hospitality is going. Mm-hmm. And there being some major opportunity in some areas that institutional players haven't branched out to yet.
It's phenomenal. No, I love it. I love it. I love it. And it's hard to find deals. I'd also second that. It's hard to find deals in opportunity zones. A lot of these deals, it seems like they were already, kind of run up in pricing, right? Yep. And even opportunity zones by nature, they're more challenging because you have to essentially, whatever you bought it for, you need to like double that in order to get the full extent of the opportunity zone. So it typically means it's either a complete gut redo of a property or ground up development. So it's hard to find all of the, it's like on a Rubik's Cube, and you got to get the colors lined up for the location and the returns, and then the team, and then the tourism in the state. And so I feel like you guys really have found this diamond in that rough, right? And you have the team. And I can also speak to your business partner, Jake, right? Who's a good friend of mine. And he and his brothers helped, do construction and rehab on my personal houses, right? And so it goes back very long connections here. So I can't speak highly enough about Matt and Jake, who are part of that dream team. So that being said, let's dive right into some of the particulars. Like, let's say somebody, A, do they need to be an accredited investor one way or the other? Yep. Right? B, let's just use, if they put $100,000 in and let's just imagine they had a zero gain. Let's say they bought cryptocurrency for $1 and it's worth $100,000 and they just sold it a couple days ago and they're like, oh my gosh, what am I going to do with all this tax? Matt, can you kind of walk us through that scenario?
Yeah. So obviously, we always preface our disclaimers, obviously talk with your CPA, your accountant, your tax advisor. With that being said, let's say you've got so we wanted to engineer this deal in a way. We're big on under promising, over delivering. One of the things that I think is plaguing the syndicator and developer world is over promising your LPs on a pro forma, what their equity multiple is going to be, what their IRR is going to be, what their cash on cash is going to be. And we wanted to make sure that if we're going to take this out, and raise this capital, that the deal itself stood on its own, whether you were putting in capital gain money or not. Just traditional equity, does this, kind of hit the return threshold that most, savvy investors and LPs would look for. So our minimum investment is $100,000. So I'll just use that as kind of our rule of thumb here in this conversation. But in that respect, if you were to just put in, traditional equity into this deal, it's going to be about a 22 to 23% IRR. Now, the unique aspect of an opportunity zone is you're in it for 10 years. So that is one aspect that is a little bit of a different caveat that some investors are used to getting, in and out within a 5 or a 7 year time frame. However, we engineered the return of capital schedule to be a little bit more favorable, weighted on the front end because of what I'll share here in a second. So if it was traditional equity going in to be about a 22% IRR, you throw in your capital gain, equity into the deal, right? That's going to significantly juice your IRR. You're not going to be paying that money to Uncle Sam, right? You're going to be able to go and get a return on that money instead of it seeing it, slip through your hands. So that would put it in the range of a 30% IRR. And what I always like to say is, the way we engineered this deal, we buffer in a lot of safety nets and a lot of contingency plans, because if we don't have to worry about those things happening, all that's going to do is just over deliver on what we promised our investors in the IRR. But we wanted to bake all those things in to be extra careful. So we're talking about, right, all of the issues that we have going on with, materials and labor. We significantly increase those prices. I mean, drastically. Where it's beyond worst case scenario, and we're still feeling good about where those are at. Our construction timelines, because we're doing development, right? So this is going to be something that we have to deliver a product, get the product operating, and then part of our return schedule is making sure that in year 3, once we're vertical and we go for a refi, we're returning 3% based on our pro forma of initial equity contributed. So you'll get, let's say that 103, that 100,000 that goes in, you're going to get about $103,000 back, de-risk it, and then our 8 pref kicks in until year 10. So that is something that we wanted to make sure that we were kind of allowing our investors to take some chips off the table. Whereas maybe in some other syndication opportunities, right, you're maybe going to see a 12-month seasoning period and then distributions might start. So that was something we knew we had to kind of play around with to make it a little bit more appetizing, because there's patience and there's also risk, being fully transparent when you're dealing with development. Interest rates, right? Or debt financing, some of these things that are somewhat out of our control, but making sure that we're baking in very conservative and careful numbers into our pro forma to make sure that, hey, we think we're going to be well below these things, and let's make sure that the deal still stands on its own with these things being in there. So when you said diamond in the rough, it really does feel like that to us. We feel very fortunate that we are hitting kind of a stride and also going to be delivering product at a time when we think the market is going to be well underserved and craving a very unique boutique hospitality product. So that's something that, we are all taking into account as we model out this construction schedule. And we're just about there to be breaking ground on this, this opportunity by next February. So the shovel and groundwork going in is going to be something that we think, Q1 will be right there to see this project moving forward.
Absolutely, Matt. It's amazing. And also, I think it's helpful to understand, too, that you've done fix and flips for hundreds of homes, right? And you've worked with a mentor who did that as well. And as well, your business partner, Jake Harris, same thing, right? So this is extensive, hands-on. It's not their first rodeo when it comes to construction projects and underwriting and contingencies and labor and all of that's involved. It's completely separate than just, hey, I'm going to go buy an apartment complex, right? And so having that dream team in place gives me the confidence to bring you on the show, right, and share this with all of the Capital Gains Tax Solutions nations. Also, we're also, by the way, streaming on CREsecrets.com if you're watching this as well. We always want to bring on the best. We are running out of time, Matt, so I know you have an amazing thought, but I want you to remind the listeners where they can find you, where they can connect with you, and Absolutely. We could always jam again in another couple of weeks, but I'm up against the hour here. So, Matt, where can people find you?
Yeah, anytime. People can reach out, Matt at VIPhousingsolutions.com, or an easier way is just to, if you want to talk about the deal, it's called the Artista. Just text the word Artista, Artista. Text the word Artista to 844-447-1555. And that'll at least allow me and my team to know that you want to talk or maybe engage on the Artista. If you want us to send over the deck and the pro forma, you want to jump on a call, we'd be happy to do that. Any investors, this is for accredited investors only. So if you are somebody that wants to jump on this call, and at the end of the day, We love to meet new LPs. This isn't the only opportunity development wise and or syndication wise that we've got out there. We do a couple of, different opportunities every single year. So just understanding other, investors' goals. What is their investment criteria? What are your return criteria? What are you looking for? Because whether it's something that we might have in our pipeline or portfolio, or it's something that we can connect you with other great vetted syndicators, I'm always a big believer in, connecting those dots, adding value where we can. So just text the word Artista to 844-447-1555. Would love to connect with anybody that wants to chat.
Cool. Thanks, Matt. Hey, I also want to thank our listeners for listening to that episode of the Capital Gains Tax Solutions podcast. Again, where we always believe it's more important to have a plan in place before you sell a highly appreciated cryptocurrency business, want to go on a 1031 exchange, and sell anything else that's highly appreciated. And so using a deferred sales trust or an opportunity zone with Matt is a great way to defer your tax, grow your wealth, and keep that money working for you. You can go to capitalgainstaxsolutions.com to learn more about the deferred sales trust. And again, connect with Matt on the opportunity zone in Texas. Hey, thanks so much for watching or listening to this episode. We so appreciate everyone out there. You can rate, review, subscribe. That'd be wonderful. And we hope